Aloha folks, welcome back to another video. My name is Mark, Mr. Dividend Investor. Today I want to talk to you about a company that probably many of you know, but something for me that I've been thinking about whether I should start coming in and doing and investing again on this company. The company's name is Zoom, ticker symbol is ZM. This company has been flourishing, has been a monster these past few months. Um, Wanted to just talk about it. As always, please remember this is not a financial advice. This is just my opinion. For those of you that are new to the channel, just wanted to say welcome. If you are new to investing and want to learn about different stocks, different companies that are not these popular stocks, but are great companies that have great dividends, great growth, um, and great value stocks, so you definitely want to hit that subscribe button, hit that like button, as I do a lot of these companies and review and show you that there are other great companies to invest on. With that said, let's take a look at this company. Company's name is Zoom. Again, the ticker symbol is ZM. So it is a company that does video communication. So a lot of schools, universities, companies have been using this throughout the pandemic. So they also do video chats, video webinars, conference rooms, so you name it. Now, if we look at the article on CNBC on November 29, 2020, they talked about how is this going to affect when the vaccine comes out. So they expect that the growth is expected to dip into the teens next year when Zoom faces very difficult comps. So because it has just shot up like a rocket and just exploded into this uh, great gains, it at some point it's going to have a dip. So that's probably what they're saying. Now, if we look further to it, they talked about how Zoom is poised to show another monster quarter when it reports results on Monday, with sales growth expected to top 300 for the second straight period. So a lot of the concerns about this company is that what happens when things go back to normal and people are going back to work um, physically. Are they going to suffer? In my opinion, I think there'll probably be a dip at some point, but I think a lot of the companies that knows that they can still generate income and keep positions at home, I think they will do that. Some companies will probably have their employees back, but we'll see. Now let's look at the balance sheet. If you look at the balance sheet, so one of the things is cash and short-term investments. So right now it's 903. Now if we look down to the bad debt, 7 million. Look at going down further to the total assets, it's 1.29 billion. Now if we go to the current liabilities, it is 455. Now let's take a look at the Yahoo Finance. As you can see, the year to date, you can see that steady upward trend, and then there was a little bit of a dip, and then it's starting to go back. If you look at the volume, it's really massive. Market cap right now is 1.3. 52-week range, the high is 588, low is 62. I did buy it when it was 62. I regret it. It's one of those stocks where you should have kept it. I didn't. Sold it for a profit. You live and learn. Sometimes you live and learn when these kinds of stocks. Now let's move over to earnings. You can see 4 straight beats. Looking at the financials, you can see, look at that. Look at that high one from 2819 to 2020. That's a monster revenue right there. Now, if looking at the trends, you can see a mixture of holds, buys, and strong buys. The rating is between a buy and a hold. It's currently right now into the average. I think at some point it's going to go to the high. Now, if we look at the CNN business stock price forecast, you can see the high is about 656, the medium is 465, the low is 315. I think it's going to continue to hit closer to this one, somewhere in between. Recommendations: 12 buys, 14 holds, 2 sells. Now, if we look at the tip ranks, pretty much almost the same thing. It is a moderate buy, 11 buys, 12 holds, 1 sell. The high is about 611, average is 477, the low is 315. Now, same thing if we look at bar chart, you can see it's a moderate buy. Currently a moderate buy for the past 3 months, so definitely something to look at. Now let's go on to the Robinhood. You can see 50% of it is a hold. So currently right now, at the time of this video, it was up 6%. For the week, it was up 9%. For the month, it's up 10%. I mean, down 10%. For 3 months, it's up 57%. For the year, it's up 539. For the 5 years, it's up 1,216. So, if you would have gotten it on the IPO in 2019, I remember I got it. It was like the 60s. I did had some shares of it. Sold it when it got to like 200 and stuff. So, you know, again, wished I could have kept it, but you know, you never know. So these are things that happen. So jumped in right now. Currently, did a fractional shares, a small fractional shares. I'm just up by a 1%. I think the earnings is tomorrow based on Robinhood. So if we look down to it, so the actual earnings is November 30th after hours. So we'll see if it dips. If it dips, I'll probably jump in it and grab, you know, 1 or 2 shares. If not, then I'll just continue until it gets a little bit cheaper. Again, you know, it's a little pricey at this point. If I were going to spend this much, I would spend on a company that has dividends, and that's just my opinion. But I think if it dips, goes down to about 450, 440, I'll definitely go and scoop it up. We'll see. Thank you so much for watching. Definitely hit that subscribe button if you're not yet a subscriber. Hit that like button as well. Again, thank you so much for watching at the end of this video. It does mean a lot to me. As always, please stay safe out there, stay cool, and definitely keep investing, guys. I'll catch you guys later. Aloha.